Hi everyone, welcome back to the US CPA classes for business analysis and reporting examination. Yes, so in this particular class, I'll be walking you through with the chapter 2, that is technical accounting and reporting. So this will be around 35% to 45% of your examination. And this video is part 4 in continuation of our series of video for the overview of business analysis and reporting examination. So I request, if you have not watched the earlier 3 video, please watch the part 1, part 2 and part 3, because this video is in continuation of the same. And we have 2 more videos coming for completing the business analysis overview section. So stay tuned for the remaining 2 video as well. So let's dive into to understand more in detail about technical accounting and reporting.
Capital expenditure and operational cost. So what is the 25% of these two? Plus this multiplied by, I would say
75,000.
Yeah, but once again, tax credit. Let's say tax credit is this multiplied by 25% and this multiplied by 25%. And this is the total tax credit you are taking, right? Everyone agree?
Yes.
Now, what it's saying is the credit or $150,000, whichever is lower. So let's assume lower is this $75,000, right? So you can take $75,000 of credit. Yes, everyone is with me?
Yes.
So now what they are saying, any credit based on the acquisition or development of capital asset must be reduced from the base. So for the depreciation purpose, you will be considering base. You will be considering 250,000 minus 62,500. So this will be the base amount for the playing area amount which you have capitalized. Right? Make sense? Make sense, Mayank?
Yes, sir.
Yes, sir. Yes, sir.
Right? Now, and another thing is important is this expenditure, which is employee cost, should reduce the amount you have taken as a credit. So here, your new income statement may have employee cost of minus 187,500. And let's assume in this depreciation of $100,000, let's assume you have a depreciation of, let's say, $25,000 from this. Let's assume you are taking depreciation over the period of 10 years. This divided by 10. So this has $25,000, whereas it has to be $18,750. Right? Are you getting my point? How I have done this math? So let's assume the depreciation of this $100,000 is including $25,000 of the depreciation from play area, whereas it should be 18,750. Right? Hence, you need to 6250, you need to add it back. So your depreciation should be 93,750. Make sense? Hello, are you here?
Yes.
Yes, sir.
So these are the two adjustments, right? Now third adjustment is in taxes. So for this tax credit, the tax credit is to encourage the small business. A credit is available. Credit is lower of 25% or $150,000, whichever is lower. That means this is your total taxes. And you have a tax credit of $75,000. So this is your refund position. right? Your taxes will go down to 0. Make sense? Or let's say if we do this. Make sense?
Yes, sir.
Yeah, Vivek, Sachin, Garima.
Yes, sir.
Yes, sir.
How much you have reduced from taxes? How much we have reduced from taxes? How much amount we have reduced from taxes? Yes, please.
29,688.
Hmm?
So the bold amount 29,688, I'm not sure.
How much is it? $75,000, huh?
Yes, sir. So
That's
like
what the tax credit is.
yes, sir.
So by the tax credit, you'll be reducing the tax liability.
Okay, sir.
But at the same time, you need to increase reduce the employee cost and depreciation.
Okay, so
Right?
like the 25% tax, that amount we have paid to the tax.
Mm-hmm.
That's the amount. Okay, okay. So
Yeah, Garima, Divya,
Yes, sir.
Yes, sir.
any doubt?
No,
Hmm?
no, sir.
Okay. So this is done. So next one is earned income credit. So earned income credit is tax credit for low income worker who have principal residence in US. And this credit is also refundable. Summary of the credit and phase out. So qualifying number of child. So earned income credit is basically for number of child you have. If you have no child, then maximum credit you'll get is $538, and phase out will start from $15,820 for a single head of the household or widower, and for married filing jointly 21,710, right? And if you have one child, you'll get more credit, which is 3,584, and phase out limit is 41,756 or 47,646. If you have two child, then 5,920, and phase out limit is 47,440 and 53,330. And if you have three or more than three child, then you'll get the tax credit of 6,660, and phase out limit are 50,594 or 56,088, 56,844. So merit taxpayer who does not file a joint return is not entitled for earned income credit. Any doubt here?
No, sir.
Three things you need to keep in mind. Child must be under the age of 19, and if he or she is a full-time student, then up to age 24, or either it's a permanently or totally disabled child. So then you can take the earned income credit. Let's do a practice question. Robin is preparing a 2021 income tax return. She has figured her income tax and is now ready to see if she is entitled to any tax credit to reduce her income tax liability. Which of the following item could be source to tax credit that she should gather more information on and see if she is entitled to any credit? So what all things she should be keep in mind to identify whether she is being eligible for any tax credit or not? First is child and dependent care, second is education, or third is foreign tax, and fourth is all of the above. What is the call of the question? What is
Which
the call of the question?
which item would be a source of tax credit that should be gather more information on to see if entitled to the credit or not.
Which of the following item could be the source of tax credit? Right? You need to identify the items which can be the source of tax credit for her. Right? If she has any child, then yes. If she has any dependent, then yes. If she is doing any higher education or if she is doing any investment on education, then yes. If she has any foreign taxes paid, then answer is yes. Right?
Yes, sir.
Yes, sir.
Cool. So this is it on the tax credit side. One more question. Let's do two more questions. Oh, we have coronavirus also. I thought you are done. Okay, so next question is Carlo, an individual taxpayer, received, or maybe shall we take a quick break after these two questions? Let's finish up
Yes.
these two questions and then we
Yes,
can
sir.
take
Break, sir.
let's finish up these two questions quickly and then we'll take a break. Just two questions, right? Carlo, an individual taxpayer, received a Form 1099 dividend from her global mutual fund that showed dividend income of $500 and foreign taxes withheld is $67. This is the only foreign source income she received for the year. Her income tax before any credit is $3,420, on which of the following form may Carlo elect to claim the credit of foreign tax paid? So which form she should file to claim the foreign tax credit? Form 1040 Schedule A, itemized deduction. Directly on Form 1040, tax and credits for the foreign tax credit, or Form 1040 Schedule B by electing to reduce the dividend income by $134 or 1040 line item 4 other payment with the disclosure statement. So which one is the right option? What is the call of the question before getting into right or wrong? What is the call of the question?
So basically, which should be selected to claim credit for the foreign tax paid?
So which option she should select to claim the foreign taxes paid, credit for the foreign taxes paid? Which option she should select and why?
और ऑप्शन बी आएगा बिकॉज ऑप्शन 1 इसलिए नहीं आएगा क्योंकि आइटमाइज्ड डिडक्शन नहीं है. ऑप्शन 3 इसलिए नहीं आएगा क्योंकि जो हमारा रेट ऑफ इंटरेस्ट है इट इज लेस देन $1,500. ये ऑप्शन सी में सर ये कहते हैं ना हमारा शेड्यूल बी जो होता है रेट ऑफ ये इंटरेस्ट एंड डिविडेंड्स के लिए if we are earning more than $1,500 then we have to attach schedule B.
Yes.
Sir, option B is the answer.
Why not D? Last option. Other payments.
क्योंकि सर ऑप्शन डी इसलिए नहीं क्योंकि हम जो हमारी इनकम है फॉरेन टैक्स क्रेडिट ये हम जो हमारा फॉर्म 1040 होता है उसके फॉरेन टैक्स क्रेडिट के अंदर ही नीचे शो कर देंगे इनकम.
Vivek, Divya, Mayank, what's your thought on this?
So I'm not sure about this one.
What is the call of the question, Mayank?
So like which should be selected to claim a credit for the foreign tax paid?
So which option will help you claiming the tax credit in your income tax return? So form 1040 is what? Your income tax return form?
Basically for the itemized deduction and the other taxes. So I don't think that itemized deduction will have be considered in the whole paragraph. So from my point of view, the option 1 was dedicated removed and look into
Yeah, go ahead.
So like options.
So do you remember this form 1040?
Yes, sir.
So here, where do you see tax credits? This is what at the end you all need to learn. So there is standard deduction or itemized deduction. For that there is Schedule A. Right? You've seen Schedule A. Right? You have seen this one? Schedule A? Huh? Yes or no? Are you guys with me?
Yes, sir.
So have you seen this Schedule A?
Yes, sir.
In very first class, I have shared all this schedule. Why you are so blank? What all comes in Schedule A is all your deduction, right? It has nothing to do with foreign incomes, right? There's no stuff called foreign income, right? All these things are deductions, which you can claim in Schedule A, right? Whereas in 1040, if you go to the taxes, here is the credit for taxes, for dependent and all this tax credit, other taxes including self-employment taxes. Right? So now you understood why it is not in itemized deduction? Yeah, Mayank, Garima?
Yes.
And
Yes,
then
sir.
schedule B is like Mayank also shared, and you can also take a look at Schedule B. If it is more than $100, then only it comes in Schedule B, right? And now 1040 line 68, other payments. So this is 1040, and if you see the line number 68, can't see any line number 68. Right? There's no line number 68, it's till 38 only, which is estimated tax penalty. So hence that statement is also wrong. So the only correct statement is tax and credit area. So where is tax and credit area? Here. You will be claiming the foreign taxes. Make sense?
Yes, sir.
Mayank?
Yes, sir.
Garima?
Yes, sir.
Next question. Before you go on a break, one more question. Tom and Mary both were employed as a bookkeeper during the year. Tom earned $125,000 and Mary earned $122,500. They had no other form of income. They paid $2,000 to child care nursery for the care of their 4-year-old son. 4-year-old son is eligible? Yes or no?
Yes, sir.
Right? Tom and Mary filed a joint tax return, claimed their son as a dependent. Which of the following statement is correct with respect to child tax credit? A couple is not entitled to claim the child tax credit because their AGI is too high. Is it correct or incorrect? Was there any AGI limit for the child
Yes,
tax
sir.
credit? How much?
Mm,
How much is the limit? Child tax credit. How much is the limit? For routine tax credit, $400,000. For married filing jointly,
Yes.
right? So their total income is less than $400,000 or more than?
So less, sir.
Less than.
Second option is Mary is eligible to claim the credit only if she files as a married separately.
Yes, sir. Because no, sir. Like that will be also like less than 200,000.
The couple is entitled to claim standard child tax credit but not expanded child tax credit. The couple is not entitled to claim the child tax credit because both the spouse have earned income. So which option is right? First, second, third, or fourth? Is a confusion, huh?
तो
Don't
ऑप्शन
look at
थर्ड भी गलत है क्योंकि एक्सपेंडेड क्रेडिट वो क्लेम नहीं कर सकते क्योंकि जो उनका एमएफजे के अंदर एजीआई है इज मोर देन 200,000.
say that again.
सर ऑप्शन थर्ड गलत है क्योंकि उनका जो लाइक एजीआई है दैट्स मोर देन 200,000.
No, $200,000 for individual. For married filing jointly, 400,000.
Sir, sir, the fourth option is like entitled to claim the child tax credit because both spouses have earned income. So like,
So, is it right or wrong? What is the call of the question? Which of the following statement is correct with respect to child tax credit? So, do you want me to go back again to the child tax credit rules?
sir, like in the second option, it's written Mary is entitled to claim only if she files separate. So that will be in the case of Tom also, right, sir?
Yeah, look at this child tax credit. So that is child should be under age 17, so it's 4 year, so it's eligible, right? Credit up to 3,000, or that is not relevant for our question. Refund is not relevant. Phase out limit for increased tax credit, 3,600 AGI or 3,000 AGI for only for increased tax credit. Advanced child tax credit, IRS pay 50%, that's not important. If IRS pay excess, then taxpayer must pay increased tax liability. Status is 40,000, 50,000, 60,000. So if IRS pay excess, then taxpayer must repay the increased tax liability. However, the taxpayer modify AGI is below this. That is not relevant. The payment received in excess to allow child tax credit may be reduced by the full payment. That is not important. No increased child tax credit if modified AGI of the tax filer is greater than $75,000 for individual, head of the household 112,500, married filing jointly 150,000. So no increased child tax credit. Increases more than $2,000, right? For routine tax credit, no credit if AGI is more than 200 or $400,000. So additional non-refundable credit up to 500 for each qualifying child is phased out in the same fashion. So limit is 200 and 400, right? In our case, because for extended child tax credit, he or she is not eligible. The couple is not eligible. So which one is the right option out of these four? The couple is entitled to claim standard child tax credit, but not the extended child tax credit. Does that make sense? Third option. Yes or no? Yes or no, guys?
No, sir.
Sir,
Hmm.
like it's written कि sir second तो ठीक है, but sir like third भी.
No, where it is written second is
So
ठीक.
not now. But sir, I'm just want to say that second, the third one is like standard child tax and the expanded. Like, what's the difference? Like,
Sorry,
sir, what's the difference between then the standard and the expanded?
were you there in last class?
No, sir.
So we discussed this, like standard amount is 2000 under the child tax credit, but in 2021, as per the new act, it has extended to 3600 if child is less than 6 year. If child is more than 6 year but less than 17 year, it has extended to $3000. But there are certain conditions which need to be met to take the additional tax credit benefit over and above $2000. So those conditions they are not meeting because their income limit is more than the required limit. Yes, everyone. No response. You already gone on a break. Are you guys here with me? Vivek, Sachin, Garima, Divya. Okay, so yeah, so this third option is right. The couple is entitled to claim the standard child tax credit, but not the extended one, right? Because their income is less than $400,000, but more than $125,000 as a married filing jointly. Make sense?
Yes.